truly an implosion of liquidity in the system. And the fact that long-term interest rates or interest rates more generally with respect to treasuries are going up is very problematic from the standpoint of actually getting done what needs to be done. I think that Ben and Janet had an absolutely wonderful op-ed stressing the powers of the Fed to provide liquidity. So I would say amen to everything that they said, and I would actually go a step further. And I think one of the things that's really missing right now within our architecture is the ability to look at the Treasury and the Fed as a consolidated balance sheet. We have this separation of church and state between monetary and fiscal policy, and we have this deflationary shock. So I would see and agree with where Ben and Janet are and say that we need to take steps which requires congressional action to essentially run Treasury and the Fed as a consolidated balance sheet.
Huh. How exactly would that work? And are you also talking about getting the authority for the Fed to buy corporate bonds?
Yeah, well, I think that would be an appropriate authority. But where I'm really getting at, Sarah, is the fact that the Fed is not allowed to buy Treasury issuance directly from the Treasury. They can only do it in the secondary market, and they're doing it, and that's appropriate and so forth. But essentially, the Fed cannot be a direct lender to the Treasury by buying new issued treasuries. And even more important, I think, in these exigent times, is the Fed is not allowed to grant Treasury an overdraft line on Treasury's checking account effectively at the Fed. And conceptually or literally, that could be changed with the stroke of a pen on a law, whereas that the Fed could grant to Treasury a line of credit so as that the Treasury could, at Congress's direction, pour money into the economy and turn it into helicopter money. So right now, we're one step away from helicopter money. We're seeing great cooperation between the Fed and Congress and the administration. I think the next logical step should be for Congress to allow the Fed to give Treasury a line of credit so as the Treasury can spend money as they should, including money into people's pockets as being discussed in the next round of stimulus, without having to go to the market and borrow, essentially run an overdraft on their account at the Fed. That is my idea for the day.
Paul, to what extent, even if all of those policies arrive in the right way, are they only really helping the bounce back when it comes to be a big bounce back? I mean, JP Morgan came out today with new GDP estimates, minus 4% Q1, minus 14% Q2, then plus 8% for Q3 and growing from there. Is the first half of the year already pretty much written off in terms of a big decline in GDP, and we're only talking about finessing coming out of it and stopping companies from going bust in the meantime?
Actually, I'm not focused too much on what's going to happen after we conquer this virus. And remember, that's the key issue, is nothing good's going to happen until we get clarity on the biological front. And I think, as Ben and Janet wrote, the key issue right now is to mitigate right now, not in the third quarter, but to mitigate right now the damage that's unfolding with this mandated shutdown of aggregate demand, and essentially provide Uncle Sam, in a broad sort of sense, a consolidated Treasury and Fed, provide Uncle Sam being there to provide liquidity for people who essentially have great businesses but are going to go out of business if we don't have funds to them, and equally important to the citizenry. I think the idea of doing a money drop is a great idea during these times, and I would just like to see it be a bona fide helicopter drop.
Paul McCulley, thanks for coming on and expressing your ideas.
My pleasure.